What's up, everyone? Here is another update. The stock market just hit record highs, and every indicator, from the buffet ratio to booming AI hype, is flashing bubble alert. Today, I'm going to share with you some quick information on whether we're in a bubble, what freaks out the pros, and how you can prepare smarter, maybe even profit. First, let's talk valuation. The Buffett indicator, the stock market's total value compared to GDP, is now at around 210 to 217%, higher than in 2000 and nearing dot-com bubble levels. Current market valuation, Yahoo Finance, Guru Focus. On top of that, Bank of America warns the S&P 500's price-to-book ratio has hit 5.3, eclipsing the dot-com era's peak. Business Insider, plus AI stock valuations are off the charts. Nvidia just dropped 5%, signaling potential overexuberance. Investors. So, does that mean a crash is about to happen? Not necessarily. A correction, a 10 to 20% dip, happens roughly every few years and averages a 6% drop over about 115 days, often followed by a rebound. Schwab Brokerage, Reuters, Invesco, a bear market, a 20% plus decline, is rarer but more painful, averaging a 7% drop over nearly a year. Reuters, Wikipedia. Remember, corrections are common and often healthy. Bear markets, while emotionally tough, don't happen every cycle. What's fueling the bubble talk now? Beyond the numbers, investor sentiment is soaring. 67% feel optimistic despite warnings to diversify. Investopedia and geopolitical and Fed uncertainty, like AI bubbles and interest rate chatter, are making tech especially shaky. Reuters, still, fundamentals matter, and not every bubble bursts fast. Here's your plan of action. Diversify. With bonds offering better returns these days, diversify beyond megacap tech. Buffett himself trimmed Apple and Bank of America holdings recently. The Australian, hold an emergency fund. A 3 to 6 month reserve is your buffer to avoid forced selling. Stick to a plan. DCA, dollar cost averaging, works best. Missing just a few of the market's best rebound days could cut decades of gains. Investopedia, add safe, uncorrelated assets. Small allocations to yields, healthcare, or even Bitcoin can smooth out volatility. So, is there a bubble? Valuations are sky high and risks are real. But with smart strategy, you can manage the storm, not get wrecked by it. Found this helpful? Hit like, subscribe for practical investing insights, and drop a comment with your market move strategy. See you in the next one.